Hello, hello, hello. Welcome now, Stock Trades. In this video, we're going to go ahead and talk about First Republic Bank. Now, we're not going to talk about the financials here, the intrinsic value. We're just going to go ahead and focus on the technicals. I want to basically paint a picture here because there's a lot of retail investors out there, and within them, there are so many personalities on top of personalities that you can essentially make money off of. Okay. So let's go ahead and turn this guy off and let's go ahead and get straight to business. So when retail investors go in and look at First Republic Bank, all they see is a stock collapsing. That's all they see is just this basically falling down, and you don't want to touch it because it's just incredibly volatile and it's just dangerous. Unfortunately, what they don't understand is there's some technical softwares out there that will help you, which a lot of you guys that are watching already know about this, but literally you have to understand some folks don't know those things. Okay. So if we go ahead and open up our auto AI that pretty much basically pre-populates the support and resistance and simple moving average 200-day, you see this company here in its full representation the past 700 days from around approximately July of 2021 all the way to April. So there are different types of traders. There are traders that are more long-term driven, where if a company crosses below its 200-day moving average, they basically start shorting or they get out of the market. And if you don't recall, this happened when stocks were peaking in the January, so more close to the end of the 2021 year. So a lot of bank stocks were doing great, and then something basically drastically happened, and a company basically broke its 200-day. So long-term investors are like, okay, I'm out. Then there are some investors that go ahead and follow the zoomed in simple moving average 20-day, which is this yellow line that you see here. And then once that basically started showing some support with 2 consecutive bounces, they went ahead and rode this wave all the way to 140 to around 170. And then once they saw a rejection of the 200-day MA, which is this dark blue line that you see here traversing the plane, that's when they said, okay, that pretty much broke resistance, broke the other simple moving average 20-day resistance, and now we're on a negative downtrend. And then they basically rinse and repeat, and they go again. But now we're basically in a different conundrum. We cannot use this specific chart to assist us because if you look at this chart doesn't help us anymore. Now it goes ahead and tells us the Fibonacci sequence retracements, which you can go ahead and use, and this will be helpful. You can copy the fibs, right? But overall, we're entering a different territory now. That's when you go in, and to all of our members, you can go into the alstocktrades.com under technicals and fundamentals, and you can use this specific technical analysis sheet, or you can go ahead and use Webull or whatever of your trading apps. But personally, what I like to look at, and I like to look at a few indicators, but I'm just going to give you an example because this can get really in the weeds. And, we don't want to focus, too much on the technicals and the line drawing here. I want to basically give you something that will make you 90% stronger than all of the day traders out there. There are essentially day traders on Robinhood, where all they do is they just look at stick figures. We know that Robinhood is not a day trading app, right? But that's what people use. And if you want to have an edge over retail, because I hate to say this, we are trying to democratize financial information to retail investors, but at the same time, our channel is small. And you having this information, not all retail investors have. So, you'll be able to scalp them as well. Because you have to understand, a lot of these folks now within the banking sector and the stock market, they're spooked. Now, if you go ahead and take a look at the VIX, which you could take a look at the fear index here and take a look at the VIX, you can see most likely the VIX probably, the VIX probably started spiking. Now, if it's greater than 30, it indicates fear. So, if we go ahead to your close section here, we could see the VIX went from 18 all the way up to 26, right? And it's 18 was greed and greater than 30 is fear, but we're getting close to that fear now. We're obviously cycling down. But if you go ahead and take a look at the S&P 500 sell, interestingly, the NASDAQ is a buy. But if we go on the short term here, nothing really changes. So we're getting 14 sells and 13 buys. So regardless, when the market is fearful and you have stocks, especially in the banking sector, this is just isolating all stocks in the S&P, you basically see that everyone is just scared out of their minds. And if you have a clear mind, a mind that's clear, that just follows the charts, you're able to scalp and make a lot of money. So I'll give you an example here, okay? So if you go ahead and go on March 16, okay, something interesting happened. Now, I'm not going to go ahead. Obviously the stock dropped down at $17. That's essentially the 52-week low that you have here, $17.53. All people saw was a big drop. I mean, this doesn't even give you the intraday drop, so this is not even accurate, right? And then what do? Well, some people just went ahead and bought. You could do that, right? Some folks go ahead and waited. They said, okay, I'm just going to go ahead and wait until this goes over the moving average. So what do we have on this graph? Just really quickly, we have the MACD, we have the price action, we have Bollinger Bands, and we have the exponential moving average. Now, personally, I like to use simple moving average, but when it comes to day trading, you want to use the exponential moving average because it's a little bit more reactive. And the way it basically mathematically works out, it's a little bit more reactive than the simple moving average. So there are some folks here that are scalping. Now, the problem here is if you're basically working and this is day trading, okay? You got to be watching the monitor here. Again, if you don't understand, I have this on the minute. I usually don't use minute because I usually do daily. If you haven't realized, this is daily. But you can't use daily when the market is flipped upside its head. So what you could do here, you see that there was a change in price action above the exponential moving average here, as well as the middle version of the Bollinger Bands. And when you do that, you could essentially ride this at 20, and you could have ridden this, as you can see, it bounce off of support from 20 all the way up here. And I want to say, we're not going to go up here because we're just going to follow the technique. You can, but then it broke the upper Bollinger Band, which is normally when I like to get out. That's around $24. So you just went from $20 to $24. Okay. Now, $20 to to 24. Now you might not think that's a lot of money. That is a 20% increase on your money. So what day traders like to do, they have a bankroll anywhere between $100,000 to $400,000, right? Now there's a smaller day traders that have around $30,000. So, and what they do is they just basically cycle in and work with $30,000 a week, right? And obviously they have huge risk management skills, right? They don't, again, remember I told you there's a bunch of personalities when it comes to the stock market. There are people, and you'll find these toxic people on Webull. Don't worry. These people are great because they are going to hold your bags, okay? So these people are the type of folks that buy a particular stock, and regardless of the technicals and essentially what they say, especially if the fundamentals are terrible, like if the fundamentals are trash, what they do is they're like, no, I'm going to hold the stock until zero. Don't worry. Give it to them. They'll basically, they'll hold it for you. Let them go ahead and do their point, which is losing money. And then you can go ahead and then essentially make 20% on your $30,000 investment. That's $6,000 you basically made in, count it, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 minutes, you made $6,000. And it's just watching the chart, seeing the MACD, looking at the RSI, looking at these components to see when you can get in and get out. And guess what? You get out. And then you wait. Most folks, they want to get in immediately. No, you wait. You wait until you find another qualified move. Okay. So then you go in and you find this move here. This looks like a good opportunity. You go ahead and write that up, right? And you can look at the MACD. It's a nice quick move. This, 23 to around 25.5. Okay. But again, some folks want to get a better move. Again, that's another, like, let's say 10% right there. But we're not going to calculate that. Let's go ahead and move and move and move and move. And all of a sudden, we're starting to see buildup. We're starting to see this. Now, you could have entered this move here, which is around $25. You could have entered this move here, okay? But then you would fall. The best move would be right here. This move, because guess what? You have essentially a cross pick analysis here where you get a support and another support. So let's assume that you basically followed in on that second support. You get in around $27-ish. You could have written all this up all the way. Let me go ahead and show you. You could have written this all the way up here, but let's just say we went from 27 all the way up until it basically fell below the upper Bollinger Band. Because again, we wanted above the price moving action. The MACD's basically following us. And right around here, the Bollinger Bands tell us, hey, there's a change in movement here, okay? So once it crosses right below that, you can go ahead and get out. So let's call that 37.50. So from 27 to 37.50. So from 27 to 37.50, okay? You do that, that is a 38% gain, okay? So essentially you got a 20% gain, and then you have a 38% gain. So you go in, and again, all your profit money that you get, your $6,000, you don't play with anymore. That's your profit money. You still go with your base of 30,000 or whatever you start off with. And then you go in and you go with your 38%. That's another $11,000. So you take 11,400 and you add it with $6,000. You just essentially made $17,400 in one day. Okay. And you can basically change your percentages of how much skin in the game you want to put in. But overall, this was a huge move. And now it's basically cooling down. But guess what? It crashed, right? It started to fall. And you're starting to see, and remember that video I posted, part 2 of technical analysis? The biggest defeat of a stock is not this. It's not when it's a higher slope. It's when the slope is near zero and it basically falls below support. And then you go ahead and then we'll look what happened. Then it started crashing. Okay. All right. We already know what's been infused. So now the stock is pretty much waiting. Okay. So then now you can see potentially there could be another up positive move here. There could be another move on the rise. And, you can rinse and repeat. Again, this is using the charts, okay? And you need about 2 humps above the Bollinger and the exponential moving average. All right, let's go ahead. Al, do you think your opinion, First Republic going to zero this week? I don't know. I don't know. I mean, if you go ahead and go on, I believe was it Twitter? And if you go ahead and go to Burry, go ahead and answer this call here. Okay, if you go to Burry posted something interesting here. And he deleted his posts. No worries. We'll go to our Stark terminal and we'll get it. We copy all of his. Every time he posts, we get a copy of it. So let's find it. Don't you hate when he does that? Let's see. I don't seem to have received it. I saved it on my phone. Long story short, ladies and gentlemen, I don't know the answer to that. Are they exposed? Yes. But if you go ahead and take a look at First Republic, they just got a cash infusion by JP Morgan, right? So if you go ahead and let's see, if you look at the First Republic stock falls despite 30 billion big banks rescue package. So they went ahead and rescued it, right? And I'm sure they are going to get amazing warrants in the future. So I don't know. Now, is this risky? Of course it is, right? So you can go ahead and alter your how much, you could do it. I don't know, like whatever is appropriate to you. Some, $30,000 for some people is not a lot, and sometimes maybe $1,000 for some people is not a lot. So it depends what you believe, what's not a lot, right? If you go ahead and take 1,000, multiply it by 38%, that's $380 and do that first move is 200. So that's around, $600-700 right there. If you just play with 1,000, right? So, essentially almost doubling your money, right? So again, I wanted to point this to you because, we don't really preface this on our channel, but it's important to use the technicals to your advantage and to not be undisciplined, meaning that if a stock starts to fall, if it falls below a certain percentage point regarding your risk management skills, you get out. It doesn't matter. You're ready. You have to, you imagine, let's say $30,000. How much do you want to lose of that? So let's just say $30,000, you have maybe a 10% risk management. right? So let's say $3,000, or let's say $5,000, right? You're going to have to understand that there's going to be losses in the game. And the unfortunate part about day traders is that they go in and basically they lose a certain amount, and they're more focused on the losses. And there's been a study about that, a scientific study by PhDs and scientists, that, the game theory, it pretty much states that people are more focused on their losses. They overestimate their losses and they underestimate their gains. If you understand that and go through the stock market as a student that understands this type of research, you're going to outperform majority of emotional bag holding day traders, and you're going to not be that 90% that fails. Okay. Anywho, I'm going to sign off. I hope this was helpful. Give you some food for thought, and maybe you can go in and utilize this software to basically see and analyze and back test this to see where you can make money in this. Okay. All right. I'll see you on the next one.